allergies take don't hold them back.
How's it going, everybody? Welcome to Trendspider Live. My name is Mike, and today we are joined with two people. We got Gary from Daily Stock Picks and Nader. Nader is part of the Trendspider team. I don't think Nader has been on a live before, so welcome.
DGen number one.
DGen number one. Yeah, Gary knows Nader very well. Nader is our affiliate manager, and of course, Gary is one of our affiliates, so these guys know each other. But we're just going live to check out mostly app earnings today. Take a look at app on the daily, and just curious, what are you guys thinking going into app earnings?
So I'll tell you, I have AppLovin is one of my other partners, Seeking Alpha with their portfolio alpha picks, and so I've got a big amount of AppLovin. So as you hold it up, remember what was it last time? Where Apple blew away, and I was on with you guys, and I kind of mic dropped and stuff.
Yeah, I think it was. Yeah,
we could either see my screen go completely black if we see like a complete crash, or you'll see me kind of dancing around like, Justin Timberlake when he was grabbing Janet Jackson at the Super Bowl. So it's one of the other extremes, I think, because I think what Sidekick is basically saying it's going to be like an 8 or 9% move, I think, but just based on some option stuff.
Makes sense. Yeah, I actually just ran a Sidekick prompt right here. I can show everybody. Basically just said, analyze what's expected today and give us a buy, hold, or sell rating. What do you guys think it said? Let's see. Hold. It loves to say hold before earnings, but it says it's a high-risk coin flip. Fundamentals remain strong, EPS growth, margin expansion. But it says the stock is caught in a sector-wide crisis of confidence around AI disruption. Fair enough. Big drawdown has reset risk to reward. It did come down. I'll show you guys the level on my weekly chart. If you don't own it, wait for post earnings clarity.
Well, and I'll give you a real life example today, Mike, because we talked about this yesterday. VRT Vertiv. It told me to get out of my purchase, which was up 20% as of early yesterday. I got out of half the position. And Sidekick just gave me the best kind of portfolio advice, and that's what I asked for. It said sell half of it, and then if it goes to, it literally said in the prompt, and I put it onto my Twitter so you can see the screenshot. If it goes to 250, you might hate me, and that's what Sidekick told me. You might hate me. Guess what's the top today? 250.
Just about.
It went to 250. So
249.95 right there. Look at that beautiful breakout on VRT today. Yeah, this one reported earnings. Was it this morning? Yeah.
And so I got out of 100% position with a 40% and a 20% gain. So it was about a 30% gain since January. I think I want to say like January 18th, 19th, somewhere in that neighborhood. So I'll take it.
Yeah, relative performance on this one is skyrocketing, or it's hanging in there. It's at 94 right now. Back before, when it was above 90, was this entire trend right here. So very strong. It dipped in April with everything. But ever since, about like right here in May, relative performance hopped up above 80 or 90 or so. And it has been, again, performing very nicely. But also, if you guys are out there in the chat, let us know what you guys are watching today. Obviously, we're going to be watching AppLovin, APP. Got my line drawn here at 422. This is what I've seen. It's a pretty key pivot level that we did react to multiple times back in December of 24, fake breakout. And several times the stock has reacted here, including just last week. So it'll be fun to see how AppLovin does. Hopefully it does good, because look at the daily, same with a lot of tech names, has not been looking super hot. Relative performance is down back at 38. So what else is reporting? We got McDonald's today as well. Which should be interesting considering how strong consumer staples are. XLP. But won't be as exciting. No, McDonald's is mostly chopping around right here, I would say. What else? We got QuantumScape, which is a smaller name. You guys heard of traded QuantumScape ever?
It's solid state battery. I love it.
Yeah.
Now, I don't own it because it's actual trash, because it doesn't have earnings. But I've traded it. It's just one of those things that you trade it based on a technical level and you're happy. Just don't hold it for over a year.
Yeah, no, I hear you. I've done the same thing. By the way, if you guys haven't, make sure to hit the like button and subscribe, because we will be live going for 3 to 4 days a week going forward here. But I do have a buddy that works at QuantumScape. He says they're on track to make revenue at some point. I don't know. They're based over here near me.
Are you getting arrested after this episode right now, Mike, for insider trading?
He's been telling me to buy it. No, I traded myself too, though. I think on like here and here on these, once the RP got up, I think I took a trade somewhere around here, but I'm not anymore. I got stopped out for profit long ago, luckily, because it has not been looking good.
I've got some marks on my chart from June 26, 2025, and selling around July 25th for 128% gain in this one.
For QS, nice.
Yeah.
It's been a decent name to trade. It had some good moments, but not as much lately. Cisco is another big one. It's looking pretty good on the weekly chart here.
They finally made their 2000. Go to like a monthly chart on Cisco, and you'll see they finally broke that year 2000. You have to go all the way back to like year 2000, but they finally broke.
I see what you mean. Yeah. Oh, yeah. They're at the exact. They just broke above. Yeah, it looks like 82. We have it marked at. Someone had it marked at 82.
Yeah.
Was the
time
peak.
to top out?
Time to top out, huh?
I think.
Would you tap out, Nader, on that one?
I think it's going to top out.
Really?
I think so.
Nader's a buy the dip guy, not a buy high, sell higher guy.
It's 20 times forward earnings, peg ratio 3.71. So it is expensive, with their growth only being like 8 or 9% year over year. But all the analysts, 24 earnings per share revisions up and 24 revenue up. Nobody's bringing their estimates down before earnings.
Yeah. No, interesting name for sure. Real quick, while we have some time before we got 8 minutes till earnings, I wanted to show you guys something that I was playing with this morning. I was talking to Gary and Nader beforehand. It's something using the What's Happening Now tab down here. And this is how you can find stocks where the CEO has recently bought and analyze it with AI. So all you do is click What's Happening Now and click this CEO buying own stock. Very, very easy. And just let it load for a second right here. And here you can instantly see all the insider trades where the CEO has bought. Would recommend putting on insider trades on chart indicator as well. Can link that down below. But if you look at, we see LUMN is one of the ones here. You see the buy rating right there on the chart, or the buy label, meaning the CEO bought or any other insider. We also have ENPH. And then what you can also do is go here and create a watch list out of all these names. But even better, you click this AI button. Oh, here, let me do it again so it opens in a new one. And Sidekick is going to go ahead and analyze all of the trades for you. Jeez. So it's actually really, really cool. If you guys like to follow insider trading, specifically here from this one, obviously from the CEO buying. So insider buys are definitely more significant, in my opinion, than insider selling, because there's a lot of reasons to sell, but there's only really one reason to buy. And
you should have done the Karen profile.
True, I should have. But let's take a look. We got a lot of ENPH buying, 3 purchases over the last few months. Total value $722,000. Now owns 1.6 million shares. Pretty big. Other ones, let's see here. We got GLSI, OPK, large dollar amount. Some CEOs, wow, look at these. TDG, this guy bought $6.7 million of TDG, of his own stock. Let's take a look at the chart right here. And you can see the buy right there at a pretty good spot. But pretty nice workflow, I would say. I thought that was pretty cool. This What's Happening Now can seem a little bit confusing, but once you guys figure out, all the little quirks and how to use it.
That's where I found the CNBC buys in that one.
Yeah.
This weekend, I was just sitting around and laying around, and I said, let me go into Trendspider and do something I haven't done before.
Right.
And, kind of like Mike, where he's having a threesome today with me and Nader. He's never done it before.
Yeah. First time for everything. But yeah, CNBC recommendations. Might as well you can take a look. It's also here. We got I don't know. I don't really watch CNBC like that myself. Stephanie Link is bullish on GE though.
Yeah, but that's in the future. You have to wait until February 27th.
Oh, that's weird. Oh, that's a bug. That's a bug. These start here. These are the real ones. February 10th and below. Look, they have so many recommendations. I think that's why CNBC gets a lot of, like hate, or at least Jim Cramer's, because you guys just sit up there and just recommend.
He's in there. Yeah. You can sort it by Jim Cramer.
Yeah.
What the hell did
filter here?
First rule, don't listen to a douche on the internet. Second rule, don't listen to Jim Cramer. And Bear Stearns, I'm hearing it's making a comeback.
Oh, crap. Here we go. His last call, February 6th, long on Apple, not recommending Tesla or Microsoft.
That kills me. If anybody didn't know, 50% of my portfolio is in Apple. And they just announced today, by the way, they're delaying Siri again.
Siri?
Stock didn't take, stock didn't take a tumble, though.
Are you talking about like their Gemini partnership?
Yeah, the onboard kind of stuff. The stock went up to 280, and I've told everybody at 280 you trim. So I trimmed a bunch. I sold, nice 6 figures of Apple today at 280, and I'll just buy it back lower. It's perfectly fine. But with Jim Cramer recommending it all the time, it takes a dump every time the guy tells you, you should buy it.
Wait, he's not recommending you, so we might see a pretty nice pop.
Yeah.
I mean, he's not recommending Microsoft, thank God, on February 6th, because since then it's taken a dump. He's recommending buy Meta.
Meta's interesting. Well, I know what I actually just got recently. My girlfriend got it for me for Valentine's Day. These Meta AI glasses. I don't know if you guys have seen these, but they're interesting.
Have you used them?
Really cool.
Barely. I used them a little bit. I was trying to get the live translation to work, but honestly, I could not really get it to work.
I'm shocked at the quality. It's pretty good.
Yeah, I don't know. Like, it doesn't do like it doesn't show anything on the glasses itself, but it's like it has the AI you can talk to, Meta AI. I kept saying I want to connect OpenAI's API to this because Meta AI is just not very good.
Hey, can you guys see David chat in here? It says PM next to me. I don't know if he's PMing me or not.
No, I see that. I think that might be part of his name or something. I'm not sure.
Okay.
But,
what time is grab? I'll tell you what time is grab. I personally, I use Earnings Hub, and it says grab will be at 4 p.m. today. So right at 4, you get grab.
Nice.
Most of the other ones are 4:05.
So wait, before we talk about app and get the results, I'm seeing some resistance around 476
on app.
Yeah, 44 cents. So I think we formed a rejection about 2 days ago. So I feel like a rejection already formed ahead of earnings. I'm kind of, if I had to give my best guess, I feel like we trade between 430 and 450 tomorrow.
So
I will tell you, it's double topped at 721 once in October and another time in December. The valuation's stretched, but Unity Software came out today from a fundamental standpoint, and they just got trashed, 30% down. That's their competition. So the question is, are we seeing an overall downtrend in the ads, or are we just seeing more going to AppLovin? Because the thing that's taken this down are the short reports, which, by the way, those douchebags actually they issued an apology letter for their short. They said, we're sorry.
They're sorry. Oh, that's funny. I don't think I've ever seen that. That's hilarious.
No, I've never seen a short.
Price, but the price did go down, didn't it?
Yeah. Oh, yeah. So it's been at 721.
Yeah, I mean, it's down 26% today. Brutal.
But I'll tell you what. I mean, AppLovin's Wall Street price target, I mean, correct me if I'm wrong, it's $714, which is 56% upside from where it is.
Let's actually take a look. We'll put up the endless estimates history indicator onto my charts here. And let's take a look. Yeah, U is trading well below all of its, and so is App. You see the lowest price target for AppLovin I'm seeing is around, what, 659?
Yeah.
650 or so. And then average is about 777. And then top line is 860. So analysts are super bullish on App 11.
And nobody's bringing their prices down. They brought their estimate revenue, the revenue estimate down, but nobody's bringing their earnings per share down. So it'll be interesting.
Yep. Market or the bell just rang. I had to restart and update my computer, so no bell today. Almost missed it, but that is 4 p.m. Eastern, and we got app here on the 1 minute chart. Should be fun to watch. And these are coming.
I got an alert. Yeah, I got an alert to sell Wells Fargo just in case anybody was. That was what was going off in my thing.
Oh, okay. Wells
We're
Fargo.
seeing some strength.
Well, I've got I'll tell you what, I've got Wells Fargo. I've got a nice big position in Wells Fargo. I'm up 54% in that one. So if I need to trim it, I need to trim it.
Very nice.
But,
very nice. While we're here waiting, make sure you guys sign up for the free Trendspider newsletter using the link in the chat and the first link in the description to get free market updates to your inbox every single Sunday. We also got Gary in here who has a Substack. Make sure to check out his Substack using the link down below as well.
I will tell your audience exclusively, because I usually put this behind the paywall. I bought a shit ton of Micron today.
Nice.
Sidekick. Sidekick literally said, buy it under $400 for a rip to 450.
No,
so
that's actually
I bought
funny.
6 figures. Yeah, I bought 6 figures of Micron. I am bullish as hell on that stock. When you just do a fundamental analysis of Micron, if they continue, if they actually outperform and do what they said they're going to do, it's not unheard of that this stock could go to $900. It's crazy to think about, but
how much more bullish are you on Micron MU compared to like the other ones, SanDisk, WDC, and STX? Because I actually, funny enough, bought some STX today with a tightish stop loss because I already made money on Micron and SanDisk, and they all hit my 20% trailing stops, but Seagate was up there, STX, that I could still get in. So
I'll give you the literally, this is from Sidekick, and I'll post it up on Twitter. So if you guys want to do, I'll just do a screenshot of it. But I had it rank. Let's see. This was on February 2nd. I said rank STX, WDC, Micron, and SanDisk. It said STX is the best opportunity right now, converging at 400 to 410. The MACD turning up. RSI healthy 60 to 70 range. Sold out through 2026. Clean entry with defined stop. WDC, it said good setup, but needs patience. The average VWAP is 250 to 260. MACD bullish, not confirmed. Micron, it said breakout watch with catch-up potential, breaking above earnings average VWAP. Resistance at 430 to 435. MACD bullish, but below zero. RSI healthy at 60 to 65. Better entry on pullback to 400 to 415 or confirmed. Look for a breakout above 445. SanDisk, it said extended parabolic, extreme momentum, average VWAP far below. 1,300% gain in 11 months. Wait for 20 to 30% correction to 500 with RSI and MACD resetting before considering buying. So
interesting.
I'll do the screenshot for you, but I use that to just load up on Micron. You know,
here's what I got. I have a pretty crazy prompt. I even gave like some of the trades I'm in, and this is how it ranked them. I had it rank all 4 of them, and it ranked MU on top, Seagate second, Western Digital third, and so like pretty much same stuff. I actually used Simon for this one, but yeah, I mean, oh, here we go, real quick. App 11 getting some movement here to the upside.
We have to hold on. We got to dance. We got to dance on this one.
I got stopped out of this one.
God candles though. Let's turn on the other camera. Let's turn on this one. And yeah, now we got the camera. We got the camera going. Where's the mic drop? Where's the mic drop? There it is. There it is.
Only 2% so far. Maybe we can get more here. Let's see if the
those God candles, man.
It's my 1 minute, a good old 1 minute chart. But yeah, the 1 minute chart can be sneaky. Look at it.
Keep an eye on 476 and 44 cents. I think that's strong resistance.
Oh no.
Oh.
Oh. It can't pick a direction. If you guys are out there in the chat watching this, tell us what you're thinking right now. Are you guys in app 11?
Oh my God.
Pretty crazy movement back and forth right now. Waiting for, I think numbers are out, waiting for to see what they are.
It's, wow, went all the way to 471. It's at 481.
This is the level of degeneracy I'd like to see when I come on stream with you guys.
Well, listen, I've gone from dancing to shooting myself in the foot going, what the hell's going on? But I don't see any like not actual numbers yet.
I don't either. What are you guys watching in the chat? Is anyone seeing anything? I think I saw McDonald's report good numbers. EPS beat, sales beat. McDonald's killed it, up 2%. Consumer staples still doing great. QuantumScape, anything going here? I don't see any news there yet. Cisco.
I know Grab. I think Grab, by the way, I think I misspoke. If I remember correctly, Grab reports kind of overnight afterwards, even though it says 4 o'clock for some reason.
Interesting. Here's app 11. Beats EPS, sales beat. 324 EPS, beating the 2.95 estimate. Very nice beat. And then sales at 1.66 billion, beating 1.6 estimate. So double beat on app 11. No forward guidance yet. For everyone out there in the chat, let us know what you guys are thinking. Also, make sure to like this video and subscribe if you guys are new to these lives.
App 11's getting killed again.
Yep. Double beat.
Jeez. That's like Shopify. Did anybody see Shopify this morning? Great earnings. And then they announce how much they're spending. And
oh, classic CapEx dip. And they improved forward guidance for revenue. 1.75 billion expected for Q1 versus the 1.69 previous. So great forward guidance, double beat, and app 11 is currently down 4% on an amazing earnings report. There must be something out there that was causing
They're not happy about the 3% revenue beat.
About the revenue beat?
It's only 3%, but
seems like a small beat.
Well, I mean, they're priced for perfection with a, let's see, they're 45 times forward earnings. So the sector of software is not loved, and that's only 24 times forward earnings. So I think you're getting killed with software. I think this is the software bump where you're just getting killed on everything.
Yeah, let's ask Sidekick. Cisco is currently trading flat. Let's take a look at these earnings real quick. Cisco, they have a lot of guidance out too. Let's break this all down. Beat, double beat.
10% on
like
earnings per share.
Yep. So pretty good beat on Cisco all across the board from what I'm seeing.
And they're down guidance. 1%.
Raise guidance. But let me go ahead and grab my prompt. Let's figure out what the hell is going on with app 11 because it is currently down quite a bit, testing the 422 pivot there. So it's still above a decent support. But let's see what Sidekick has to say about app 11. Let's go on the daily charts. You can see that's where my line is. That is being tested again. Got wicked below it there for a couple of days and popped up. Had a great day 2 days ago on February 9th. That Monday.
My horizontal line's at 417, which is a high from December 2024.
Yep.
Which it seems just, hey, it's been using that line to kind of bump up and bump down to. So
yeah. No, that's right. That's basically what mine is at. I just didn't line it up perfectly, actually.
Yeah.
Well,
I think it might
a couple of levels. Or go ahead.
It might go to like 380.
If that goes to 380, that's a screaming buy. I mean, I need to see like the revenue and stuff like that. Just, but good God, I mean they're growing.
Yeah.
98% revenue growth year over year.
Yeah, you can
They're
see it
already
right here.
already under 410.
But Sidekick gave it a buy for what it's worth. Bear case here, we got some recent analyst downgrades. Apparently, AI hurting sentiments. Limited runway in the core gaming, the gaming saturation, which is interesting.
That was the key metric that I think the core gaming was what I think the street was really looking for.
Yeah.
But God, it's down 12% now.
Snaps up just a bit. Yeah, hit under 410 and now sitting at 414. If you guys are out there in the chat, let us know what you guys are thinking. Someone keeps asking about QS. Let's take a look at QS. Nothing's going on yet on QS from what I'm seeing. Got a bunch of people out there in the chat. Cisco. Let's take a look at Cisco again. Let's have Sidekick take a look at Cisco. But App11, buy rating from Sidekick. They had a great earnings report, but selling off. So maybe it's a buy the dip op. It's really just getting hit. It sounds like just by the overall tech weakness.
It's software.
Yeah, software.
It's labeled as software, and I think they get dinged just like Microsoft gets dinged because they're labeled as software. So I think App11 comes back. I'm concerned that it's under that 417 level, but we'll see where it opens tomorrow. You did have the death cross, by the way, on a daily. Well, you haven't had it yet on App11, but it's trending that way with the 50-day coming down. The Bollinger Bands are wide open, with it trading kind of near the bottom of the Bollinger Bands.
Let's see.
I love Bollinger Bands.
Oh, wait. Where are you seeing a death cross?
Well, I was seeing it on the 4-hour, but I guess on the daily, it hasn't. My standard is, you guys know, I just look at the 4-hour.
That's fair.
And the death cross isn't as harsh or as reliable on the 4-hour as it is on the daily.
Yeah.
But if you get that on a daily, that's and the stock is growing 98% year over year, and you get a death cross, revenues are growing 98%. That's just huge. Oh, and look, is it coming back? It's at 424 now. Yeah.
It's retraced quite a bit, only down 7% now, up like 3.5 off the bottom.
I think that 417 is a key point just across there, that line that I drew. So it's interesting. I know a bunch of my listeners have App11 because it's a huge portion of that. I mean, I can tell you right now, let me go in and tell you guys. So the Alpha Picks portfolio, they picked App11 on, let's see, 11/15/2023. It has returned, let me see, 1,571% on closeout. So that's the position that's closed out currently in the portfolio. App11 has returned 978%. So, I mean, they just got in early. So I know a bunch of my listeners are in it, but God, that hurts that it's down that low.
It's been trending for quite a while now. You can see it started back all the way in 2023, and ever since then, it's really, you haven't really been able to keep this one down, except for an everything dip there in April. It's taken another dip recently too, of course, obviously right now, but it's still, hanging in there above some pretty key levels for now. I don't know where my horizontal line went, but let's stick it back somewhere right there.
Yeah.
If the app keeps dropping down,
was that?
If app keeps dropping down, they're gonna have to take back that apology for that short report.
Yeah, right. Oh man,
you get a short report to literally issue an I'm sorry after they tanked the stock from 700 to 400. And I would have thought that the stock would have taken off after that. And honestly, these earnings are good.
They're great earnings. Well, I guess the revenue growth came in at 3% or so. It's 3%. You can see here on the on what's going on here on the right hand side. You got mostly over 3, more like 4, 5, 7% growth. So
but those are huge moves. I mean, when you're moving from 450 down to 417 and 412, on a 1 minute candle, that's volatility, which you traders should love. I mean, honestly.
Yeah, absolutely. Volatility is great for traders, absolutely, and investors. I mean, it's a great Peter Lynch quote. I don't remember it exactly, but it was something about volatility. Is like, I mean, it's great because without it, you wouldn't be able to make money.
Look at HubSpot, HUBS.
Oh, is that one out?
They beat earnings per share by 43%. Software.
HubSpot, yeah.
And they're down 6% after hours.
Let's use Sidekick. It's just so much easier. Here's Cisco first off real quick. Cisco, pretty good report here. Again, these are the actuals versus estimate last year. Forward guidance was pretty good. Couple check boxes. Guidance beat on both metrics. So Cisco, absolutely baller. So yeah, looking good. And HubSpot, interesting one as well. Let's throw this prompt in. But HubSpot is down, 3% on the day.
But look at the earnings.
But if you zoom out, it's been dropping since
it's software
last year.
Oh yeah. Oh,
it's software. It's getting killed.
HubSpot.
But their earnings per share, they beat estimates by 43%. $3.09 versus $2.16 estimate. They beat revenue by 1.96. But again, that's software. And I don't think software is getting any love whatsoever.
It's not. Energy is getting a lot of love. We'll talk about that in a second. But here's HubSpot. I mean, EPS beat, sales beat, forward guidance double beat. Couldn't have been much better. Sidekick sales says hold though, because let's see. Negative stock reaction indicates market had priced in a stronger quarter. Kind of same thing it said about Cisco. But yeah, we'll have to wait for the call. And very cool. If you guys didn't know, Sidekick AI can summarize earnings call transcripts for you. Tomorrow, if you want, if you missed the earnings call, we'll probably play one today. But if you do miss one, open up Sidekick and just tell it to summarize Hub's earnings transcript from yesterday. And it will go ahead and do that for you guys. That is Trendspider's Sidekick AI that we're using here. But yeah, pretty shitty day for software. Oh, HubSpot coming back though. 435, only down 4%. Let's see when their earnings call is.
That's just, I mean, the RSI on a weekly on HubSpot is at 23. At some point, this is a buy.
Yeah, I know. I mean, this reminds me a lot of the Oracle chart.
Yeah.
Which eventually, I guess it's bouncing up this week finally a little bit. They got earnings.
If you go to HubSpot and you just kind of go to the 2022 lows, you're below it.
Yeah, sitting at the 2020 highs, really, right before COVID, trading like pre-COVID levels.
That's crazy.
Crazy, right? Great company. I mean, look at this revenue growth.
Yeah.
Beautiful.
It's stock price. Expensive for software. Not really. I mean, its PEG ratio going forward is 1.06.
It's just, it's just the markets. I mean, software is just not where the money's in right now with all this AI kind of craziness going on, people not believing it, whatever. And because of that, we got on my stock market map here, energy popping off over the last 30 days, up 17% on XLE, over the last 7, up 6%, clearly leading everything. Followed by, what else do we got here?
I'll tell you.
Go ahead.
My favorite energy name, MPLX.
MPLX. Let's take a look.
Michael, this one. Paul. This one, the chart won't tell you the story. It's the return. a 7% dividend since COVID, and a stock chart that shows you just how well it's done since COVID.
Pretty steady.
Yeah. I like to chart this one against the S&P, the S&P return, because you just see how that dividend, that 7% annual dividend, just blows away with this stock continuing to climb.
Let's see, the relative performance was up pretty good over here against the S&P. It's you could put on the price compare.
Can you guys show dividends, I guess, on the chart as well, like total return, I guess?
Not that I'm aware of. There might be a way to do so.
Oh, look at that.
Investment indicator or something like that. But yeah, that's it versus SPY. Definitely covered pretty good, depending on where you look at it from.
Do you guys have any energy names in your portfolio? That's the only one I hold. I wish I held Exxon, because Exxon just blew past the 120.
I've actually been looking into WWD or Powell. I like VLO. VLO is interesting. It's breaking out to new highs. Exxon is always a good one. Beautiful, like multi-year breakout here on Exxon. I honestly did just buy XLE like last week or 2 weeks ago on the breakout here. I'm just holding the ETF. CVX, yeah, it's a great one.
So I asked Sidekick to create an energy portfolio, and
nice.
It gave me SLB, CVX, XOM, COP, DVN, and XLE. I added XLE in there. I wanted some XLE.
Yeah, COP is a good one.
DVN has had, look at DVN. I mean, that's a comeback.
Yeah, no, I actually like this one. This one is actually looking pretty good. This one's on my radar as well. Recent breakout out of this base down here. Let's call it right there. But yeah, energy. That is where a lot of the money is going right now. Same with consumer staples. XLP has been killing it. Industrials, Caterpillar, absolutely destroying it. Obviously, I've seen Caterpillar, but lots and lots of money going into Caterpillar.
I'm still watching App Lovin', and it's literally it's going between that. I mean, it looks like it's climbing back up.
Wow. Yeah, no, App was looking good. Real quick, QuantumScape is finally out. They beat EPS. They lost less money than expected at 17 cents a share versus 18 cents. And I don't think they have any revenue still, which they haven't. And CapEx, they announced from 40 to 60 million. I'm actually very curious to see what Sidekick has to say about QuantumScape real quick as well, considering it doesn't have any revenue.
They have no revenue. Yeah, I'm looking at it right now.
Sidekick doesn't like revenue. when a company doesn't have revenue, it's gonna roast it.
Yeah, but Sidekick loves MicroStrategy. I mean, it really does. If you guys haven't asked it about MicroStrategy for some reason, I mean, it's like it's side chick. MicroStrategy is sidekick, side chick. I mean, it literally is. You can ask it. I think if you pull up the Karen persona in Sidekick and you start like insulting MicroStrategy, I think it will ban you from asking any more questions.
It's funny you say that. It's funny you say that because I kept asking it about shorting MSTR and it kept saying no, not a good idea. Don't recommend it. And then it played out so well.
That's so funny. Yeah, App Lovin' popped up a little bit there. It's honestly not down the most here in after hours.
I think it's putting in that 417 kind of. Hey, we might see it's at 457. No, I'm sorry, it's at 430. But it keeps. Wow.
Yeah. Here's the QS report from Sidekick. It looks EPS doesn't look bad. I mean, clear improvement over last year. Revenue, none, of course. Forward guidance, this will be interesting. Improved. Adjusted EBITDA loss improved to 250 million or so, down from prior, which is a good sign, I suppose. Sidekick doesn't give a sell, though. It actually does say hold. It says it delivered on execution and validated its business model with initial customer billings. However, commercialization remains over 3 years out, with VW's 2029 target. I believe they do have a VW, contract for the future if they ever, eventually make a battery that works. I don't know a ton about their business model, but they are, like Gary said, a solid state battery, EV battery company. But yeah, it's just saying it burns tons of money, 60 million a quarter, and won't generate really meaningful revenue until the end of the 2029. So I'd say it's not a sell, but a lack of near-term catalyst and unproven scale-up risk. So it's really just like one of those bets that you got to wait probably several years for if you're going to invest in QuantumScape, if it ends up paying out.
So I have a friend who works at NASA. He works on engines, and he's not bullish on solid-state lithium batteries. He feels like they have too many issues and that they won't get it right.
It's a super hard space, and they just haven't been able to. If somebody's going to figure out, I think it's quantum space, and I think somebody in the chat had mentioned, hey, that's a life-changing stock if they get it right. That's true. So if you've got money, say you got like $10,000 that you could care less about, and you want to put it into something, I wouldn't suggest it. But if you want to put it into QuantumScape and just forget about it, that's probably not a bad YOLO kind of thing. I mean, I don't know how too many people that don't care necessarily about $10,000. I can think of 100 different better ways of spending your $10,000. But you literally that could be the lottery ticket. And if solid state batteries are what their CEO expects them to be, that's exactly it. Here, Mike,
might as well buy Melania.
Yeah, exactly.
Might as well buy Melania ahead of the Melania movie premiere.
Melania meme, yeah, it's gonna pump with the movie, right? I saw that.
That's kind of what
Mike,
it feels like.
I just put a prompt in the chat. See if you can ask Sidekick which memory stock it likes to buy.
Can you put it in our private chat so I can copy and paste it? I can't copy it from there.
Yeah, let's see if you can copy it from the private one.
I should be able to. Here we go.
If not, you can just make your
memory stock.
Yeah. If you wanted to just do your spelling errors and have Sidekick correct them, because we saw that yesterday when you were making the spelling errors. And
I'm notorious for that. I'm notorious for that. It's too.
But I went over this yesterday, I think, with you. I said we saw Mark Zuckerberg in, I think it was August, say energy is the bottleneck. We don't have enough energy. And that's when Oklo and all those guys, and they went out there and did the deals. And so you saw that spike. Now we're seeing CEOs say memory, literally Razer computers, those PCs. He said at CES, I can't give you a price of our stock based on memory or of our next flagship PC. So I want to know, specifically, I'm betting on Micron, rather large. I like Micron. I think my average purchase is somewhere in the 200s or something like that. So I'm still adding to it in a big, big way. But I wish it was SanDisk. God, I had SanDisk on my podcast's watch list in August. And I put it out there to the paid members. And I said, this is one you want to watch. I got out. These are paper hands, not diamond hands. So it's horrible. But I mean, I think that's a great for anybody wanting, and then show up a year later and say, hey, douchebag, Sidekick got it wrong. But so far, Sidekick has gotten it right on the dot with Hood last night. Told us $78. And what did it close at today? $78.
Yeah, now Sidekick is goated. Let's see. This is the prompt right here. The prompt was, if you had to buy and hold one stock memory stock between now and the end of the year without selling, which one would you buy? And here's the ones that listed: Micron, WC, AMD, NVIDIA, and PSTG. Which one is PSTG? Pure Storage.
Pure Storage. It's
an
the
interesting
crappiest
select.
of the memory names, but it's a memory name, so it pumps.
It doesn't
What
even have
about
STX up
WC?
here.
WDC is Western Digital. That's a great one.
Yeah.
I don't know much about that. You guys recommend it?
They spun off SanDisk, but it looks like it's saying NVIDIA is the most stable. It hasn't moved. Both Micron and WC have run up hard recently. You'd be buying momentum, which can reverse quickly. AMD's valuation stretched.
I do find NVIDIA like rather tempting at these levels. I mean, it has literally traded sideways from 180 to 190 all the way since we'll go back July. I mean,
yeah,
August.
Video pretty flat.
It's been dead money, yet it's gotten cheaper because they're continuing to grow their earnings.
Yep. When do they have earnings? They have earnings later on, February 25th. So that'll be coming up in 2 weeks from today. Make sure you guys subscribe and join us for that. I think we're having Tushar Shandi back on, which will be fun.
Oh, he's great.
If you flip to the monthly time frame for NVIDIA, you'll see usually move sideways and then we'll start to pop up. So
that's kind of what I'm expecting.
That's what I'm hoping for, you know, like these STX and Micron. But I mean, these ones are just so extended. Like Micron is up how much from just
throw a MACD on there?
500%. Yeah. Throw up the MACD here.
I mean, even NVIDIA on a monthly with the MACD, the Qs have never been this high, by the way, on a monthly MACD, any of the indicators. You throw them up and they're just incredibly like extended.
It's actually kind of wild. All the way back to 1999 here on the monthly. Yeah, that's actually insane. Like even what was this 2021, we surpassed those levels.
It's funny. Derek is saying when I ask that question, I get a response telling me the Sidekick will not give me trading advice.
That's
how the hell is that?
I've
never gotten that response.
Yeah, me neither.
Shit, that they're ready to throw out all trading advice. Doesn't even give me a disclaimer that this isn't financial advice.
It's at the bottom. Check it. Not investment advice. This chat uses vetted data, but AI can make mistakes. Check important information, not investment advice.
Okay, good.
Yeah, but
no, of that list that it gave, I'd say I agree with it 100%. The risk, it's kind of like my Apple, my Apple advice. Apple, greatest risk reward right now in the market, because what could happen if they get Siri wrong? They're kind of Apple Intelligence stuff. You could go back down to 250. You're not going to zero. So the risk reward there is, if they actually get it right, I think it's a $350 stock.
Yeah, I mean, they're just relying on they partner with Gemini for their AI. Which is cool, I guess. They don't really have the inherent AI risk that most people do. I think they're also partnering with maybe Claude, or they invested in Claude.
They did.
Which Claude is killing it. I mean, if you guys are using Sidekick, absolutely use the Claude model. It is by far the best.
I think that's the one that you default to, don't you?
Probably.
Yeah. I don't have the Sidekick Plus, so I default to Claude 4.5.
Yep, that's what I use.
It's great.
No, it's the best. I absolutely love Claude. ChatGPT might be better at some things, but I think Claude overall is probably best. And Gemini is pretty good too. But for Sidekick specifically, Claude is by far. And I told it, oh, look, it actually did kind of get that message. It says, I can't tell you which ones to buy, but I can highlight critical issues that influence
the one time we do it on stream, it says it.
I know. I've never gotten that. I can't tell you. Go to my take. Yeah, if I had to choose one. So it tells you it can't, but then it goes ahead and does it.
If I had to hold one, Micron and Western Digital. But the bias, it says you're chasing recent performance. Obviously, they've all run hard. The question is whether the cycle continues or if we're near a top. Neither of us knows that. I mean, that is exactly what is going on right now. MU snapped back up today on the daily.
I told you
pretty
guys
nicely.
I bought a bunch of MU.
Yeah. I mean, the key here is that you just get out before a stage 4 decline starts, really. I mean, it's fine to hold these, fine to stay in the trend. Yeah, I would just say use a stop loss, manage your risk, and don't get caught up bag holding if it pulls like, a big, like we were talking about earlier, a Cisco move back in whatever, the bubble here. You still want to be caught in this.
Like, I think I'm one of the three of us, the only one that actually traded that market.
Yeah.
In 2000.
Yep. Wasn't me. I was not trading back then. I was hardly born back then.
I was trading back then. I've been trading since 1985. So I did feel that 2000. And I told my buddy this today because we were talking about Micron. And I remember my dad buying a company called Exodus in like 1999. And I think he paid like $40 a share. And I think it went to split adjusted about $4,000 a share. And within 3 months, it went to zero.
Interesting. That's crazy.
And he didn't sell.
Wow.
He lost his initial investment. He didn't sell. He kept telling, I remember him telling my mom, it's going to come back. Don't worry. It's going to come back. But that was those were the days where you still didn't really have a ton of information. The internet was still new and you were on bulletin boards. So, the tools that you guys have provided us today with Sidekick and all the indicators and stuff like that, there's no reason, like even gambling wise. I mean, as long as I stay with confirmation over the 9-day EMA, as long as I start to trade, usually it's less about, oh my God, I'm going to lose money, but it's more about, okay, when am I getting out?
Right. Yep.
And I'm a buy and hold guy. So I go by the Warren Buffett. I'm not willing to hold a stock for 10 years. I don't want to hold it for 10 minutes. So I'm usually trading pretty quality stocks. Of course, AppLovin may not be one of those quality stocks based on today.
Yeah. Someone's asking about how to use stop losses. There's a lot of ways to think about that. Let's see. But if you go to like MU here, I personally like to use a trailing stop loss. You can see if you just go on Trendspider, you can actually just right click anywhere, create an anchored indicator and do a trailing stop, long anchored, or even a volatility stop. You can use ATRs to base it off of. And
in fact, Mike, you have your brokerage linked up. So your strategy does trailing stop loss for you, right?
Yeah, I have an indicator that automatically paints it. STX here, for example, is these blue dots is my 20% trailing stop. But if you didn't want to go, set a trailing stop, you just wanted to set one, I would say, like in this case, I think most people like Minervini, all those guys, they do like 10% or less, just depending on the setup. So like I'd probably set it like somewhere like down here. Honestly, like right where it is, not gonna lie. Like 10% or less, like 7 to 10% is what I've seen kind of the sweet point. 1 second, guys. I think Tesla is here to do something for my car. 1 second, they're calling.
It's okay. We'll take over.
We can, yeah. Hey, I had my car fixed yesterday and I made the joke. Mike, you can tell Tesla that, Elon's got like 19 kids and it came out yesterday that he's emailing Jeffrey Epstein on Christmas morning when he's got 41 freaking kids to watch. On Christmas, you couldn't pick a worse day to actually have an email, come out that you were emailing Jeffrey Epstein on Christmas morning when you're supposed to be with your kids.
But, is that the email about the wildest party on
I know. I don't think it's that email, but there's any email between Jeffrey Epstein and Elon was pretty much about a couple of things, not really business, but a couple of things. So, okay. Mark Beiser saying, I'm old enough to remember when you had to call your broker. Yes, Mark, I am too.
Oh, wow.
Paper millionaires up in flames. No, I will tell you, Eco Signals, I have more money than I know what to do with currently. So I'm not just a paper guy. Talk about how you use stop losses. Mike was just talking about, I will tell you guys, Nader, I've never used a stop loss in my entire career. Never, not once.
So I have interesting transitions with stop losses. I had a community that follows me, and I recommend a stop loss for them. Especially if you're saying something publicly, like there should be a threshold where it's clearly breaking down. You should get out. You're going to lose more money over time. Hims is a good example. I've been breaking down from 70. A lot of people, let me pull up the chart, give actual levels.
Yeah, I don't know. Can we take over Mike's? I guess I can present. It says present.
Yeah, go for it.
I don't think I'm going to go for it. I got too many personal things open up here. I'm like that streamer guy who had the porn links show up, but all of my stuff is my personal like portfolio information. I'm not going to do that.
That's funny.
But yes, so stop losses, and you've got a community that you manage with and stuff, right?
Yeah, not so much anymore, but I used to. And pretty much, if you're going to put something out in the public, it's a good idea to give them an invalidation. Like Hims, I was bullish around 41. It's clearly breaking down. It actually formed a bearish retest of 41. And right now it's at $16. So like letting them know, hey, it's clearly going down. Have a stop loss. Mike recommended a 10% stop loss. I think that's too generous. If you're taking 10% losses, it seems pretty high. I've gotten to a level where 3% stop loss is what I recommend.
You guys Trendspider have a great risk reward calculator.
Yeah.
I like that one.
Yeah. And like I'm usually buying the dips. Like for this chart right here, I would buy near the lows that we're looking at right there. Let me see what those price levels would be.
I'll tell you my strategy on STX. It's my 4-hour algorithm. Backtest really well, wins 59% of the time.
Sorry about that, gentlemen.
Mike, do you use full self-driving?
No, I don't.
Oh, you're missing out.
I have the 2021, so I don't think it's as good. But I need new tires, so that's fun.
You're getting them from Tesla?
Well, they came to rotate in my front yard here, and they're like, yeah, you're just gonna have to get new tires because it's under 3 or whatever.
Oh, so, that's bad.
Tesla tires are really bad. I think the battery's too heavy.
No, it's the torque. Because Mike's got a lead foot, probably.
I used to, absolutely. I absolutely used to, but I got a ticket 3 days into owning the car, and I've chilled out since then. Speeding ticket.
What was the infraction? Was it speeding?
Oh yeah, it was what was it? 77 and like a 45 or a 50.
Oh, Mike,
you should show them.
Were you running down school buses? What the hell was wrong with you?
Dude, I was literally just at a red light and I just sped up, ahead of everyone. And I like do that and I slow down,
Yeah.
End of braking, whatever. And before that happened, cop lit me up. I was like, shit.
Show them the YouTube and ask for a break.
Yeah, right.
Yeah, I was going well over 100 on a 65, or it was a 75. I don't even remember, but the Georgia State trooper who never lets you off. And he goes and hands me the ticket. I said, "Is this a warning?" He said, "No." He goes, "I'm giving you the full ticket." I said, "You didn't even give me a break." He goes, "No, but I want to talk to you about the iPad that's on you." Dude stayed around and kept me for like 30 minutes talking about the free. And I didn't want to be rude, but then I'm like, "Can I get this lowered or something?" And the guy's like, "No." So now I'm a super speeder. So I got that kind of thing.
Oh man. Yeah, bike cop got me. Someone said he should have outrun him. Yeah, no chance of that.
You were pulled over by a bike cop?
Oh yeah.
Mike, this is embarrassing. You were in a Tesla and you got pulled over by a bike cop?
Dude, he was hiding on the side of the expressway.
Just keep going.
Why do you think he'll outrun a bike cop?
I didn't see you, douchebag.
Dude,
I
bikes
didn't
are
know.
super quick.
Oh, it was a motorcycle.
Yeah. Oh no. Yeah,
okay.
Not like a pedal.
Oh,
bike.
you thought it was a bicycle.
Yeah, it was a motorcycle. Yeah.
Here, I'm thinking Mike is getting, Tour de France by Lance Armstrong going, hey, pull over.
Bro, if a literal bike cop, yeah, I would have considered dipping, honestly.
Yeah, I know.
I don't think we have those in California.
Oh, you do? I was during my drinking days near the Playboy Mansion. I was chased down while running by a bike cop in Beverly Hills.
That's hilarious.
Yeah, I got stories.
Sounds like something out of a movie.
By the way, Justin is commenting about your thumbnail guy with Michael Saylor and Tom Lee. It was legendary today. That's honestly why I wanted to come on, so I could repost the thumbnail.
Oh yeah.
Oh, it's so good.
McDonald's earnings, baby. Michael Saylor's new employer. McDonald's actually came down.
Cisco's dropping. Wow, Cisco's down 10%.
Wow. Cisco.
Is that on spending?
Did I just call the top on live stream?
Yeah,
Cisco?
you did. You said it's going to top out.
Oh, you sure did, actually, Nader. On the monthly here, the top is 82.
Oh, is it spending?
Previous top.
It's got to be something. I don't think the call comes up until 5 o'clock.
Yeah.
Is it just me or is everything dropping?
No, everything looks like it's dropping. Let's check out Q's. QQQ's hanging in there. SPY is hanging in there, but what's Microsoft doing? Microsoft hanging in. Tesla, Nvidia, AMD. Yeah, it depends where you're looking at, I guess.
Taiwan Semi's up 3% today.
Yeah, they've been killing it, haven't they?
That's one I'll tell you. I mean, that you talk about risk reward in this market. I think Nvidia, Jensen Huang was on his media tour last week before. I think he's in he can't comment on anything now, but he was telling you everything is, we can't ship enough chips. Well, guess who's making the chips? It's all Taiwan Semi. And Apple has said before, we can't get enough chips. And Qualcomm came out and said, we are 100% restricted from memory and chip making. It is just a glut. So Taiwan Semi, there was rumors out there that Taiwan Semi finally raised their price for Apple. And when Jensen Huang was asked, well, how much is too much to pay Taiwan Semi? He said, there's not a price.
Wow. That's wild. Yep. Doesn't surprise me with how TSM has been acting lately. I'm going to look at it. All-time highs. How's AMD on the old monthly chart here? AMD is still hanging in there too. Get rid of this indicator real quick here. Okay, shout out to Rock Reagan again. I'm always using his indicators. You got this endless ratings tables, the after hours change percent.
Is that the guy who puts out like nine indicators and they're all out?
No, he's the one with the bottom catcher and the after hours change percent one.
I saw his stuff yesterday. Loved it.
Yeah. No, he's got some good stuff. But look at AMD sitting right here at this pivot level from March of 2024 on the monthly, above this gap as well.
That's so funny. You've got that. I've got my red line, my horizontal line at 227.30, and you've got it at 227.74.
Yeah, I have this whole range kind of built out because under this is this gap from before, and we got a gap. Got a gap to fill to the downside and gap to fill to the upside here on AMD. Yeah, the gap.
227, by the way, is March 2024, where it peaked.
Yep, right over there.
I have one recommendation for you guys on that report tab that you have open, Mike. On the right side, you can on the report tab.
Oh yeah.
I like to look at some quarterly trends on the bottom there. Sometimes you'll find some patterns. If you place your mouse lower, a little down. So I like to look for some trends there sometimes. If you go to GME quarter 4, you'll see it tends to perform very well. And then
for what,
actually
EPS or revenue?
revenue.
Okay.
Let's see. No, you know what? Was it bad? Or it might be quarter one.
Let's see. I mean, overall,
I
these
don't
numbers
know.
on GME specifically, I'm seeing a lot of red here. Maybe it's
Are you putting your roaring kitty filter on,
No,
Nader, here, going
no,
on
no,
GameStop?
no. But I do like Michael Burry. I think Burry is bullish now, so I think that's interesting.
yeah.
Um,
Burry is a bull on
Oh, he's
GME.
bullish because the cash that these guys have, they
Yeah.
did a bunch of raises where when the stock pumped, what's his name, Ryan Cohen was
Right.
just issuing more stock and getting cash.
Yep.
he
Yep.
ruined the rally, I think. Actually, if you look at quarter four, the numbers are very high. The value is above $1 billion. They tend to get larger spikes for quarter four. In terms of the report.
Yeah,
The
I mean, they
value,
got this 1.28 billion in quarter four of 2024.
yeah, they've
So
just
it's
been
always,
underperforming.
yeah, it's interesting for sure. Someone in chat also is asking about how we're setting these horizontal lines. What was this name that we're looking at? AMD.
It's my favorite, that horizontal line.
Yeah. It's pretty it's pretty easy, honestly. We're just looking for a key pivot level. So this line here, just this March 2024 high. You can see the high above here when you hover over the candle. So I'm doing that. See the H227.30. And then you just go here, click the horizontal line, and you just click it right there, double click. Oh, I clicked it perfectly on the first try. And there you go. And you can do that for any level, basically.
By the way, just to give you an idea, GameStop, I was looking this up. GameStop trading at $24. They actually have $17 per share of cash on hand.
Wow.
Because he keeps diluting investors, then he keeps raising more.
Yeah,
cash.
you're really only paying $7 per share.
That's interesting. We'll see if it turns out. When is their earnings? You got some insider buying right here. Let's take a look at who is buying GameStop.
That was Cohen.
Cohen, yeah.
Okay. Makes sense.
About like 10 million.
Yeah. I love, by the way, your Investing Legends package that you guys have.
Yeah.
Those scans are just legendary. I mean, again, I was talking about sitting around on a Saturday and then just going in and playing with all this stuff. Your software is so. I subscribed in 2020. I go back to the days when Jake was still doing the Trendspider videos, and the software is just so expansive. And when I sit down on a Saturday and I'm like, okay, I'm going to play, half the time I get overwhelmed and I'm like, okay, I'm done. My setup's good enough. I'm happy with it. But it's so deep. And whenever I change something, Mike, this is what I'm always amazed at. And I'll tell you guys, whenever you change something, you make it look so easy. It takes me a half hour to get back to the setup that I had if I change anything. So yeah. I wish you guys had an undo button.
That's an interesting something that a lot of people ask for that I think we're planning to add is a saved layout. So if you have everything set up how you like it, you can press save and then be able to switch back and forth between
different layouts. Perfect.
Yeah. Same with like indicator sets. I think that is definitely something I've let Dev know about. It could be a good win for sure.
And if people have like suggestions to contact us, I mean, I don't know if I'm a pain in the ass or not, but I put my suggestions in the contact us. I don't know where that they go anywhere, but my top 3 are a dump for you guys to give people to talk about the top sidekick prompts. I think that save layout would be tremendous. And I'll think about the third because I'm sure I've gotten a third one, but I should probably put these things in the contact us area.
Yeah. No, those don't go unnoticed. We have a whole section, our whole channel in our Slack called feedback.
Sweet.
Yeah. So, I mean, there is a laundry list of stuff going into there, as I'm sure you can imagine. So, I know I wish we just had unlimited development opportunity.
You guys do it. I mean, honestly, the software that you have today is so perfect. I mean, you're in a bull market. If you've had Trendspider for the last year, I don't know any one of my subscribers who hasn't made that annual subscription money back, if not more.
Yeah.
So it's been simple.
Sidekick. I mean, it saves you so much freaking time. It's insane. Like, it is absolutely insane. And so, yeah, if you guys want to check it out, I'll drop a link down below to check out Trendspider and mainly Sidekick here. We have a Sidekick product page that you guys can look at and decide if you want to check it out. But you can get we always basically run trials. I think right now, the lowest one, you can try out the platform for $19. So $19, you get to try out Sidekick. You can try out all the custom indicators. And you can even use the contact us button at the bottom right to hit up one of our customer support guys. They can help you set up your platform, set up scans, really anything you want. So, but look at this, App 11 coming about $444. You went ahead and bought at $418 right there at this level. You're sitting pretty good right now, honestly.
There's a data center REIT that just reported their earnings, EQIX. They're up 10% in post market.
Oh yeah, good one.
And you're getting a, let's see, 2.19% yield, and year to date you're up 11% just in this stock.
Interesting name, Equinix. Been basing for quite a while, but revenue growth is pretty nice. EPS looks pretty good on the monthly here.
That's the only stock that reported that I seem to be able to find that is up after reporting.
Yeah, I mean, we had what, QS down, App down, but trying to come back up. Cisco, how's Cisco hanging in there? Cisco way down still. Way down on Cisco still.
One thing I do like, by the way, just in my personal time, not necessarily on while I'm on the podcast or anything, are those multi-chart looks that you guys have.
The multiple symbol view.
Yeah.
Yeah. It's really nice. Trendspider, actually, I think, to my knowledge, allows you to have the most charts on a single layout out of anyone that I've ever seen. Every time I open this freaking thing, there's some wild stuff going on in our multi-symbol view here. But look how many you can add. I mean, it depends on your monitor. I can add, what is this, like 48?
Yeah. And it works well. I've got a 49-inch widescreen monitor. It's like a fucking cockpit in here. And I can put that over, and each chart I can actually read. It's fantastic.
That's beautiful. Yeah, if you have a massive monitor, yeah, you can get a lot of charts on your screen. Very cool. Very, very cool. Look at SPY. I'm sitting here in this range. Let me see. I think App 11's thing is going to start sooner than later.
Let me see what time their call starts.
It's in 2 minutes. I'm trying to.
I've got it live
up here.
It seems like they're about to hype up their earnings call.
By the way, I'm seeing Friday, Cameco CCJ is reporting.
Oh, it's a Zoom.
Oh, you got a Zoom on App 11?
Yeah.
Recording in progress.
Recording in progress.
Yeah, it says it started, but I don't think anybody's talking.
Yeah, I got it over here. So once this loads up, we'll probably hop out of here and let you guys listen. We've been live for about an hour now.
It's at 451, the stock price.
Yeah, I'll let this sit here. Oh, there goes Zoom. Can I pop this guy out? Probably just maybe leave the audio.
You're on your StreamYard setup?
Yeah.
I'm telling you, 5-minute chart on App 11 in the after. That 5-minute chart looks really good.
It's insane, right? Going right back up to where it closed.
Yeah.
Get my thing out of here. Let me get my audio up real quick.
And I'm telling you that 471, I think it was 47. Yeah. No, I'm sorry, around 550 is where I think we could go, but I'm not making predictions on this one. I know that my 4-hour algorithm beats buy and hold.
About to begin.
Oh. All right, gentlemen. It sounds like App 11 earnings call is beginning.
Welcome to App 11's earnings call for the fourth quarter.
Gonna hop off
ended
here.
December
Thank you,
31st,
Nader and Gary,
2025.
for
I'm
joining
David Chow, head of
the
investor.
Trendspider.
I enjoyed the
Live.
first Trendspider threesome. So thank you guys.
Yeah, absolutely. We'll do it
Happy to
again
be a part of
sometime.
it.
Matt Stump, our CFO.
Thank you for having me on.
All right,
Please
guys.
note our SEC
See you
filing
guys.
date, as
Guys
well as
out
our
there in the
financial
chat, this is
update
the
and press
App 11
release discussing
earnings,
our fourth quarter
and
annual
we'll catch you guys
performance
next
are
time. Make sure to
available
like
at
the video and
investors.app11.com.
subscribe for more lives.
During today's call, we will be making forward-looking statements, including,
Also, I'm going to
but
drop
not
a
limited
link
to,
to sign up for our
the
free
future development
weekly
and reach of our
newsletter.
platform,
But
our
here is the
expected growth
call. Let me know if
opportunities,
y'all can hear this
the
in the
expected
chat
future
below
financial
before I
performance of
hop
the
off
company,
as well.
and other future events. These statements are based on our current assumptions and beliefs, and we assume no obligation to update them except as required by law. Our actual results may differ materially from the results predicted. We encourage you to review
Can
the
you guys
risk
hear
factors
this?
in our most recently filed Form 10-Q for the third quarter ended September 30th, 2025. Additional information may also be found in our annual report on Form 10-K for the fiscal year ended December
Perfect.
31st, 2025, which will be filed later this month. We will also be discussing non-GAAP financial measures. These non-GAAP measures are not intended to be superior to or a substitute for our GAAP results. Please be sure to review the GAAP results and the reconciliations of our GAAP and non-GAAP financial measures in our earnings release and financial update, available on our investor relations site. This conference call is being recorded and a replay will be available for a period of time on our IR website. Now I'll turn it over to Adam and Matt for some opening remarks, then we'll have the moderator take us through Q&A.
Thanks everyone for joining us today. I want to start by addressing what's clearly on many people's minds. While I prefer to ignore short-term fluctuations in the stock price and focus on maximizing value over the long term, the recent volatility warrants addressing. For the past few weeks, there's been a lot of discussion about how AI and competition will challenge our business. But when I look at our internal dashboards, we're delivering the strongest operating performance in our history. What's fueling that growth is our own AI models. And as research in AI, both internal and external, continues to improve, our business will grow with it. There's a real disconnect between market sentiment and the reality of our business. Before I talk about the opportunity ahead, let me explain how we think about competition in AI. First, on competition. Since day one, we've competed against many companies. We've never feared competition because it forces us to innovate to serve our gaming ecosystem even better. We operate a foundational piece of the ecosystem, the Max Auction. It's critical for the ecosystem that the Max Auction improves through more competition, which in turn helps publishers make more money, leading to more user acquisition. Now, in a typical zero-sum auction-based market, if one improves, another loses. In our case, as bid density goes up, the pie expands, and while our share of the auction may shrink, our economics actually grow. There are impressions our model understands extremely well and it values highly, and others where we have less signal and value them less. When competition wins an impression, it's very likely to be the one that we value less. This leads to the publisher making more, and in many cases we do as well, because instead of winning a low value impression, we get to charge the winning bidder 5%. When you hear about a startup coming for our business, you should be asking how their value proposition can be stronger than ours. If our value proposition wasn't strong with our partners, we would have lost those relationships long ago. We have competed very well in mediation against giant companies. The network effects in this business are very real. We scaled our network by providing the best monetization and, even more importantly, the best advertising tools to publishers. The combination is not something peers can overcome. Second, let's talk about AI and game creation. The bearish view assumes that if AI makes games easier to build, the value of our ecosystem declines. Well, we believe the exact opposite. AI will dramatically lower the cost of creation, which means content will explode. And when content becomes abundant, discovery becomes a scarce resource. Even in the past, as mobile games were built by human teams, the content was plentiful and in many cases commoditized. That is actually what allowed us to deliver such a strong value proposition through our advertising solutions. In a world where anyone can create an app or a game, millions of experiences will compete for attention. The winners will be the platforms that can efficiently match the right user to the right content at the right moment. That is exactly what our models are designed to do. We are not tied to any specific genre or format, casual, mid-core, or beyond. Our systems follow engagement, and AI only increases the potential of that capability. Furthermore, we don't see any evidence of a declining mobile gamer. Casual gaming serves a different human need than console, PC gaming, AAA games, or any other form of deeply immersive game experience. People will always look for entertainment that fits naturally into their day. What's changing is how well that attention can be monetized. Even today, we convert only a small portion of those impressions that we serve. We view that not as a limitation, but as a large, long-term opportunity as our models continue to improve. Now that brings me to what we control, performance and culture. On performance, our business is executing extremely well. We continue to grow very quickly, despite the numbers getting much bigger. We delivered strong growth in Q4, and despite typical seasonality where Q1 should be softer than Q4, we are guiding to meaningful sequential growth. That reflects both continued strength in gaming and the scaling of our e-commerce and our self-service customers. On culture, we embrace being underestimated. A skeptical market sharpens our focus and pushes our teams to execute. Our revenue per employee remains among the highest in the world because we build the best and most scalable products in our category. If the market chooses to price our stock based on fear, while we continue to compound revenue, cash flow, and product capability, we'll stay focused on execution and let our results speak over time. From where we sit, we are still in the early innings of what this platform can be. With that, I'll turn it over to Matt to walk through the financials.
Thanks, Adam. Q4 marked what was not just a strong quarter, but the most exceptional year we've ever delivered, and one of the strongest performances in the public markets. At our scale, the combination of growth, profitability, free cash flow, and capital returns we're delivering is extraordinarily rare. Revenue in the fourth quarter was $1.66 billion, up 66% year over year, driven by continued technology advancements to our core mobile gaming business, seasonal strength, and the expanding impact of our e-commerce initiative. Adjusted EBITDA was $1.4 billion, up 82% year over year, representing an 84% margin. Margins expanded over 700 basis points from the same period last year, and quarter-over-quarter flow-through to adjusted EBITDA was approximately 95%, again demonstrating our relentless dedication to execution and how efficiently incremental revenue converts into earnings for our business. Investors often reference the Rule of 40 in software. On that basis, our 66% revenue growth and 84% adjusted EBITDA margins translate to a score of 150. That level of profitability at this growth rate is almost unheard of and reflects the fundamental operating leverage of our model. Free cash flow for the quarter was $1.31 billion, an 88% increase year over year, growing our cash balance to $2.5 billion and reinforcing the strength of our balance sheet. This was a truly remarkable year for AppLovin. Revenue reached $5.48 billion, growing 70% year over year. Adjusted EBITDA was $4.51 billion, up 87% year over year at an 82% adjusted EBITDA margin, a margin profile that very few companies ever achieve, let alone sustain at the scale. Free cash flow totaled $3.95 billion, up 91% year over year, underscoring not just growth, but the exceptional quality and durability of our earnings. Simply put, very few public companies are scaling faster, more profitably, and with greater cash generation than we are today. That strength directly translates into shareholder returns. During the quarter, we repurchased and withheld approximately 800,000 shares for $482 million. For the full year, we repurchased and withheld approximately 6.4 million shares for a total of $2.58 billion, funded entirely by free cash flow. As of the end of the year, we had a remaining share repurchase authorization of approximately $3.28 billion. Over the last 4 quarters, we reduced our weighted average diluted shares outstanding from 346 million to approximately 340 million, while simultaneously investing in organic growth and maintaining substantial liquidity. Our share repurchase program reflects our conviction in the value and durability of the business. Turning to our outlook for the first quarter of 2026, we expect revenue between $1.745 billion and $1.775 billion, representing 5 to 7% sequential growth. Adjusted EBITDA is expected to be between $1.465 billion and $1.495 billion, with an adjusted EBITDA margin of approximately 84%, maintaining best-in-class profitability as we continue to scale. To close, AppLovin represents a combination that is exceedingly rare: sustained hypergrowth, exceptional margins, massive free cash flow generation, and disciplined capital returns. We believe this puts us in a category of our own and positions us to continue delivering outsized value for shareholders over the long term. Now with that, let's move to Q&A.
We'll now begin the question and answer session. Please be sure to unmute and turn on your video before asking your question. We will take as many questions as time permits, and since we have many questions today, please be patient as we move through the list. Your first question will come from Benjamin Black with Deutsche Bank. You may now unmute and ask your question.
Great. Thank you for taking the question. So my first question is on the e-commerce opportunity. So could you perhaps sort of reflect on the self-service launch? What were some of the key learnings? What worked? What didn't? Where is there room for improvement? And to the extent possible, it'd be great if you could sort of share or quantify the e-commerce contribution to revenue or gross ad spend this quarter and in the guide. And then I have a quick follow-up. Thank you.
Yeah, so the e-commerce business obviously has been live with us for a year and a half. It's doing really well. In Q4, we opened up the self-service platform, referral only. So we're not at the point yet where we're sort of a GA type launch. We'll get there. We said first half of this year. That's still on track. What gets us excited are a couple things. One is the current customers that had lapped Q4 2024 into Q4 2025 saw material increases in spend as our models just keep getting better. Now, remember, this business and the model around this business that drives the value for the advertisers is really in its infancy. It takes us a while to continuously iterate to improve the model. In fact, just a few weeks ago, we had a pretty sizable uplift. So those same customers from the prior year cohort saw big growth. Then you ended up with new customers coming in from the referral program. I mentioned on the last earnings call, we were seeing substantial growth there. We're not going to see anything that's going to impact our overall numbers for a while, but we're seeing great trends. And I'll talk about advertising, leading advertisers into our platform later on the call, but we're just seeing numbers that get us excited. On the breaking out e-commerce, we're not going to do that because we think of our platform as a unified platform. But let's say tomorrow the engineering team improves the gaming model 50%. Well, e-commerce would go down, but the business would be ripping. That wouldn't mean that there's anything wrong with our platform. Fundamentally, we're one single auction, but getting more diversity will give the model more ways to serve the end consumer and should drive up our overall conversion rate. But we think if we start talking about verticals in a marketplace like ours, you start getting really misleading information that will throw investors off.
Great, I guess. And then sort of my second question is sort of, it's related to a feature set that you're rolling out. So I think in the past, you mentioned the conversion uplift your partners could see if they have the ability to not only optimize for the best performing creators, but also sort of really scale and automate the creation of these video assets. So I guess with that backdrop, how far along the automation curve are we now, and where could we be in the next, call it 12 to 18 months?
Yeah, great question. We're still pretty early. I pulled some numbers earlier just to compare where e-commerce companies are when they upload ads and how many they upload to our platform versus the gaming companies that have really had a decade plus to optimize for our platform. Top gaming companies run tens of thousands of ads at any given time. The top e-commerce companies are in the hundreds. So you've got a huge discrepancy here. And if you throw more ads at our system, the model does much better. That's just a fact. It gets the chance to diversify what the end user sees and try to find something that's going to eventually convert that user. Now, how do we bridge the gap? It is twofold. One is the customers have to get more accustomed to our platform to know what types of creatives work so that they can build up production around the things that work and multiply out the count. More importantly, though, generative AI tools to build creatives in a really low cost way and an automated way is on the way. We already have in a pilot with over 100 customers, generative AI-based tools for one part of the ad unit. Our ads are a video, plus then an interactive page, and then follow-up of a shop preview dynamic product page. But that middle one, the interactive page, is not something that these advertisers are accustomed to building because they don't need them on social or search. We're now generating those automatically for over 100 customers. We'll roll that out soon as it's showing good performance to the broader set of customers. And shortly, we're going to have the video model go live as well. We're going to run the same pilot process. We're going to make sure the video output looks good. But if we get to a place where the video model can help these customers create new video ads in bulk in cost of dollars versus cost of thousands of dollars, we expect the count of ads for these new customers on our platform is going to go up a lot. And that'll make them more competitive against the gaming customers that are on our platform.
Great. Thank you very much. Very helpful.
Yep.
Your next question will come from Jason Bazinet with Citi.
Thanks so much. How are you guys doing?
Good. Hey, Jason.
I think one of the things that investors have always struggled with a bit is just sort of what they would call the black box nature of the model. Like they can't get comfortable sort of, doing a P times Q and sort of extrapolating the model out there. And I know you're not going to break out, as you said, e-commerce from mobile, but as investors are sort of looking at these e-commerce accounts that have, your pixel on it, what counsel would you provide to the buy side in terms of using those numbers and trying to do some math to get some sense of how well you're doing? Thanks.
Yeah, I mean, look, it's really, really hard because we're just getting started. Facebook's probably pixeled over 10 million sites. You've been publishing our pixels in the thousands. So it does correlate to the count of advertisers that we have on the platform, but we're just starting out. We can't build a P times Q model in a period of time that we expect to have really outsized growth. Once we open up the platform, start running marketing to the platform, start doing more sales, you're going to end up having a ton of advertisers coming in. We can't predict it. It's not going to be stable until we get to a much further into the future point. But what gets us excited, like I mentioned on the last answer, is we're already testing in advertising to get customers on the platform. So what you're seeing right now is just referral-based advertiser count. But if we start actually being able to market our platform and get customers to convert through the funnel, that's going to help us really catalyze faster growth to go get advertisers in the absence of a sales team. And one stat that's really cool that I pulled earlier, we're testing in light volume on ads on social and search, and then we're doing referral programs. But right now we're seeing somewhere around day 30 LTV to cost of user acquisition. So if you think about lead gen models, and if you know lead gen models, and also if you understand the life of value that we create for advertisers, which is in the many years, to be able to break even on the media buy in 30 days is exceptional. We've got arguably one of the best business models the world's ever seen, and we're seeing the ability to market our platform in small testing at that level. That gets us excited. Now, we're not ready to go to GA yet, and you can ask why. And the why is because we still need to optimize our conversion funnel. That we're no different than any social network that's going out and trying to get users. We want to get users into this advertising platform. Right now, we're seeing of qualified leads, 57% of advertisers go live. That's 43% breakage. We think we can get that number much closer to 100% before we open up. And despite that, we're seeing this 30-day break even roughly on LTV to CAC. So we're really excited about where we are. We think we're going to go through this hyper growth phase as we open up and really start pouring advertisers in. Once we get to a stable place where we can start predicting count of advertisers in quarters to come, then we'll give you the P times Q.
Thank you.
Yep.
Your next question will come from Omar Dessouky with Bank of America.
Hey guys, thank you for taking my question. I wanted to ask a more general question because the market seems to be having an AI moment here. So, let's just forward 3 to 5 years in the future, to potentially a world where consumers interface with the internet through natural language-based agents. LLMs are different than performance advertising neural networks, but how would your business be affected by potentially a change in how consumers interface with the internet? So that's the first part of it. And then the second is, how do you expect, again, over the long term, 3 to 5 years, how would you expect casual mobile game developers to adapt their content to a world where they compete for time with these sophisticated chatbots?
Yeah, so great question. The way I see the LLM is that it's going to enable anyone to be able to type out ideas for a game and get a game created. That doesn't mean you're going to get users to play your game, but that means you can create content in a very low cost way, not being an engineer. That'll accelerate content production for studios that are developed, that are sophisticated. It'll also create a flood of content that's more personalized across people who could just become game developers with no engineering background. That's a good thing for us. In the talk track I mentioned, as you get more content, that content becomes commoditized. The discovery platforms, of which there are very few, become the true value, because those customers are going to have to come to Max to monetize, and they're going to have to come to our discovery platform to run advertising to get users to their space. Now, if humans just want to talk to a chatbot, do nothing else, of course, well, there's nothing else that they're going to do. We would lose time spent in games. That seems far-fetched. The games that people play today in our domain are not very immersive games. They're quick to play, relaxing games, and people play things like a solitaire, people play things like a mahjong. This audience skews older, it skews female. This is an audience that's very unlikely to stop playing crosswords in 10 years because they're talking to a chatbot. So not only do we think that the base audience is going to keep playing games, you're going to need relaxing outlets. If LLMs increase productivity, people likely have more time to go to outlets like games. And if LLMs increase production quality and production capability of games, you're going to have more content, which leads right into a business model like ours.
Okay, thank you.
Your next question will come from Bernie McTernan with Needham.
Great. Thanks for taking the question. Wanted to follow up on e-commerce. Given the self-service launch, are you seeing any changes in the type, size, categories of customers that are entering because of self-service versus the prior managed service? And then also as a follow-up, we've seen some examples in our own tracking of apps that aren't e-commerce with the Pixel. Is this a one-off or a new growth vector that you're pursuing within this?
Yeah, I mean, obviously with opening up self-service, we're not gating to a minimum GMV anymore. So in the prior year, we had pretty high minimum standards for businesses. Now you're getting companies that have a few $100,000 of GMV, a couple $1 million of GMV a year buying on our platform. What's nice about that is not only do we see the ability to track performance very clearly on a brand that's small, if they start spending money, the money translates to revenue, and it's really obvious in their numbers that their pre-existing revenue was a few $100,000. I'll give you an example. We had a year ago this Israeli cookware company come live that did $4 million of revenue, and these types of stories make us really proud. Last year, they scaled on our platform. 65% of all their user acquisition spend was on our platform. They scaled to $16 million of revenue and are profitable in doing so. And we can see the results directly translated from the spend on our platform to their growth. This year, they're ramping so quickly, again, putting most of their UA spend on our platform. It's looking like they're projecting to $80 million of revenue. So you start seeing that kind of ramp up in certain specific customers, and we know the product works, and it works exceptionally well. That makes us proud. We think what we really like to do at this company is service the smaller businesses, help those smaller businesses become big businesses. That's how we built into gaming. We helped the indies first. Now every gaming company in the world that's in mobile that's substantial is probably working with our platform in a major way. But in e-commerce and these other categories, we feel the same way. Help the smaller businesses, help them scale their business, and then we'll get to all the brands over the coming years. In new categories, again, we're not gating anything. So if you end up in auto insurance and you sign up for our platform today, you can go live. We're still early in these other categories because for each one of these cases, we have to tune the model somewhat, and we're focused right now on anything that's transactional-based business versus a lead-based business. So think if you're a transactional-based business, you're not e-commerce, but you're fintech or something. That could work really well out of the box. That's another category of growth. But then there's a huge sector of lead gen businesses. You want to collect the user's information and sell them in a call center. That's going to come too for us in the coming months, where we really focus on a category like that. It's our job to service every transactional category that buys on a performance basis and do it well, so that the billion plus daily actives we see on our platform can get a diverse set of content that they can enjoy.
Thank you.
Yep.
Your next question will come from Matthew Cost with Morgan Stanley.
Hey, everybody. Thanks for taking the question. I guess starting just to put a finer point on some of the comments from your prepared remarks, because the data points from the channel were a little unusual and thin. Did you see a test from Meta doing more advertising in the in-game, ad environment? And whether or not you did, how should the market think about what potential impact a scale player like Meta, for example, getting more aggressive in that market would mean? And then a second question just around Max. You've been in the business of convincing people to switch mediation platforms for a long time. I guess in light of that experience, how would you characterize the moat around Max?
Yeah, so two good questions. So the Meta thing, Meta was a launch partner in Max. They're a good partner. They've been in the Max platform for a long time. They are a bidder on anything that has an ID today, and they're not a bidder on anything that does not have an ID. So think IDFA off. That's about 2/3 of the full screen ad units that they currently bid on. They started bidding more on that, as you saw on LinkedIn. They did not start bidding on no ID traffic, and they might very well bid on no ID traffic in the next couple quarters. As you know from our business over the last couple of years that you've been following, there have been numerous times where we've added more competition in the Max auction. Unity's grown with Vector. Liftoff rolled out Cortex and is growing really quickly. Moloco has been growing, and we turned them into a bidder in the last year. You had Google switch to bidding. Every time this has happened, there's been this confusion around, well, in an auction dynamic-based system, competition should decay AppLovin's edge. You've never seen that happen. And this is what I tried to cover in the talk track. The reason is that, one, we're really big and really good at what we do. But two, every impression is not worth the same thing. Our model is exceptionally good at valuing the impression for what it is for our data and our customers. Sometimes it values it really high where we make a lot of money. Sometimes it values it low where we make less money or potentially lose a lot of money. And what happens when you get these bidders getting better is that they take some of those impressions that we value low, where we might not have made any money or any material money, and now we get a 5% amount that we can tax the bidder in our ecosystem. So growth in the ecosystem allows the Max market economics to improve, and we've never seen growth in the ecosystem cause harm to our AppLovin bidding environment since we got so good. Now, this is post-Axon 2, where we became the market's dominant player. So I do think it's an important point that people are getting lost on. So I want to see if you have another question on that before I go on to the mediation discussion.
No, that was very clear. Thank you.
Okay, so on mediation, look, we got in the market with Max when we bought it and built that technology. We didn't buy technology, we just bought a way into the market. That was in 2018. The Max platform before we bought MoPub had already grown to become #1 in the space. When we bought MoPub, we put the two together. As everyone knows, we're very dominant in the sector. We took the MoPub technology in sub 90 days, threw it out, migrated everyone that we could over to our platform, rebuilt the best features of MoPub, put them on top of the best features of Max, and ended up with a very dominant position. At this point in mediation, there's been a few players that are sort of out of business, and then there's Google level play in us. And then obviously you have the startup that people have been discussing. So in a world where CloudX becomes a startup that comes into the space, you have to talk about, like, what are they walking into? How's the world different today versus what it was? The moat around our mediation is not because of the mediation. We're very good. We've got the most bid density. In any mediation A/B test, if you talk to publishers, you'll hear Max does better. But we don't blow it out of the water. We're a few percentage points better than other mediations. If someone wanted to pay a bonus to cover that, they could potentially pay a bonus to cover that. Where it gets really expensive for the publisher and where we're really locked in is that we have the best advertising solutions on the market. In fact, for a lot of these publishers, we're over 50% of all their user acquisition spend. They can't go get that anywhere else. If they go off Max, that decays. And so they're left in a world where they have the best buying tools. They have the best monetization tools. It becomes a really strong 360 solution, and their growth depends on it. And then the Max ecosystem is not growing slow, as we've talked about in prior calls. This is a double-digit, very strong growing category where these publishers are seeing their businesses improve because of the improvement in our technology. When you've got that in the foundation and you've got a really strong moat with technologies that no one else can replicate or have, then you end up with a sticky solution, and we're very confident our solution is just that.
Great, thank you so much.
Your next question will come from James Heaney with Jefferies.
Yeah, great. Thank you, guys. How are you thinking about the Axon marketing investment in 2026? I know you talked late last year about a goal of maybe $1 million of spend per day. Is that still the right way to think about it? And is ultimately GA kind of the biggest prohibiting factor to you guys doubling down on that investment? Thank you.
Yeah, I mean, look, right now we're testing, so numbers aren't that big. You didn't see anything reflected in our EBITDA margins. In fact, you saw them go up to 84%. We think the growth in the business is so high and our LTV to CAC is going to look so juicy that you're not going to see much decay in our EBITDA margins from ramping up marketing. If you do, then that'd be a great thing. It just means we're ripping on the marketing side and we see a ton of customers that we can bring in to accelerate growth. But it's much more likely that we're going to go controlled on this because we do want to take our time to build out tools. When we start buying and go GA and bring customers in, if we don't have good content creation tools for them, create the video with generative AI tools, create the interactive pages with generative AI tools, and do it in an exceptionally strong way, they won't have as much success on our platform. So that's a long way of saying we're in no rush. We're seeing 30-day LTV to CAC roughly. If we see that at scale, we're going to scale, but we're not in a rush because we want the tools to catch up to the opportunity.
Great. Thank you.
Yep.
Your next question will come from Alec Brondolo with Wells Fargo.
Yeah, hey, thanks so much for the question. I appreciate it. I wanna double click on the Meta thing because I kind of think that's the most out of all the noise in the market. I think Meta is by far the most important. Right now, probabilistic targeting is the basis of competition between all the mobile game and app networks. I think there's no doubt that you could definitely compete effectively against Meta on a probabilistic basis. When I talk to investors, I think the concern in the market is that Meta could find a way to bid deterministically on opted out ATC traffic with their audience graph, which would give them, an advantage over the vertical ad networks. Do you think that's possible from a tech perspective? And if it was, would you still be confident that market expansion could offset the loss of market share?
Yeah, I mean, look, I think it's possible from a technology perspective. I think it's blatantly against Apple's terms. I don't think the space is big enough for Meta to say they want to violate the platform they depend on's terms. So I'm skeptical what you said is going to happen. It'd make no logical sense. In a world where they're bidding deterministically or probabilistically on no IDFA, they're still competing against the Axon 2 model. 5 years ago, when Meta was really big in the space, and I think this is what's throwing people off. People recall a time Meta was half the space. They think it's going to be half the space again. Meta has been on IDFA-based and Google Ad ID-based traffic since that no IDFA change. Nothing has changed for them. What's changed in the marketplace is that the other ad platforms that are built for this category, Unity, Liftoff, Moloco, et cetera, have gotten better. Now, we've gotten the best. Axon 2 was the biggest breakthrough in a model in this category, period. And we were able to end up becoming the number one by a lot. Axon 2 didn't exist 5 years ago. So there's no world where Meta is going to end up becoming that kind of a dominant player in the face of this competition. In fact, I don't see a world anyone else can because they're going up against that dominance. And these models, as they build more data, it's a closed loop model that's continuously reinforcing itself and getting smarter. Our model is so far into getting smart for this niche. The niche isn't that small. And we've got such a strong position, it's highly unlikely that someone else is going to come in and materially disrupt it. So long way of saying, again, no, we don't see what people are so afraid of. We think psychologically people just index on numbers from 5 years ago and think, oh, Meta's going to ramp to that. But just ask the customers you talk to, what's the share of wallet between us to them and to everyone else on IDFA-based traffic, and that'll give you an indicator of how good we are.
Perfect. That's super helpful. And maybe just one additional question. On the marketing dollars that you're spending against Axon today, where you're earning the 30-day LTV to CAC break even, what are the most effective channels? Like I see the ads on Google search, I see the ads on Facebook and Instagram. Where are you finding the most success? Which platforms are you finding the most success in leveraging to acquire customers today?
It's a great question. I mean, we're too early in testing to really assess or give anything directional because we don't want to be misleading. But I'll say some of the coolest yields that we've seen and coolest partnerships are these partnerships with the measurement companies. So if you talk to Triple Whale, they've got a sponsorship from us. TBPN, the podcast, branded their gong with our brand, and that's driven a bunch of business. So stuff like that, we're at such an early point. Part of the direct response channel here is actually just building the brand. So when we get placements like that, people start hearing about this Axon Ads platform. Then they go to Google, and we don't have any SEO yet. Once we get history, and to put more content out on our blog, which we're committed to do, and get more link backs. We'll also have SEO. But today, in the absence of, Google search words are also great. We're starting to get brand recognition. People know our platform's critical. They go search Google and we're the first ad word now. We're not the first organic link because we don't have that history. So all this stuff is going to improve over time. And we think our job is to combo brand advertising alongside this direct response to really unlock growth in this thing.
Perfect.
Your next question will come from Clark Lampen with BTIG.
Thank you, guys. At the risk of, I guess, just sort of, overdoing it around this meta point, I wanted to see if you guys can just, Matt's laughing, so I think I am overdoing it right now, but just remind us, I guess, the sort of scale of bidding that you guys, are doing right now. I think the 11 billion or over 11 billion number that you provided in the blog post is the most recent example. Is that something that really needs to be replicated in this segment of the market for probabilistic bidding to really drive signal or capture signal that would allow somebody to replicate the same sort of degree of efficacy? I think it would just be helpful for people to understand, maybe even if somebody wanted to move in this direction, what are the sort of capital constraints of doing something like that?
Yeah, I mean, look, first of all, like at the base, there are different approaches to modeling these businesses. Meta has a model that's fantastic, super sophisticated, but built for social. Most of their training data is on social. We've got a model that's cutting edge, very sophisticated, built for our ecosystem. Our training data is predicated on that ecosystem. Our customers are perfectly tuned for that ecosystem. We started in gaming. We're the biggest there is in game UA dollars. So those dollars aren't just going to shift because someone else comes into the space. The dollars are already locked in on us, and our model is very smart. When there's a high value user, sometimes our model bids thousands of dollars on a CPM basis. The model knows what works for these customers. So it's just not something that's conceivable in a marketplace where you have budgets that are already given to us and we're on cutting edge technologies for someone else to come in. Now, if we stop innovating and we decay on the technology side and we stop providing the service to the customers where they start looking around, yeah, those things could change, but that's not going to happen overnight. And the one thing we can say confidently, 14 years into being an engineering product-led org, is you've seen us move incredibly quick. We are innovators. Engineering team is top-notch, second to none in this field. And so we're very much focused on continuing to push our models forward, and we're doing it from a very strong leadership position.
Okay. And if I may just ask sort of a very quick follow-up, prospecting campaigns. This was a product launch, that sort of came about recently. There was a lot of very strong feedback in the channel throughout the quarter around the efficacy for some customers seeing, full shift in sort of repeat versus new customer mix. Could you talk about the way that product, I know that you guys don't want to give sort of specifics around your non-gaming business versus the gaming one, but would it be possible to sort of contextualize the impact for us, or maybe what you're seeing with advertiser behavior heading into 2026?
Yeah, I mean, you've probably talked to some of the advertisers, so you hear positive commentary on it, but it's really hard for advertisers to understand the incremental value of retargeting. It's really easy to understand the incremental value of a new customer. And so it wasn't lost on us for a year and a half when we got into the market that just a universal campaign that had a split of new customers and retargeting wasn't the final answer. We needed more targeting for these customers to map to their goals. So we rolled out this product in Q4. We let them upload their historical purchases. Using that data, our model can start tuning away from purchasers from the past and towards users that they've never seen before. Results were fantastic. It takes a while in an advertising marketplace for every new product to get adoption, but we've seen really quick adoption on this one because when they flip the switch, they instantly start seeing many more new customers.
Thank you.
Your next question will come from Robert Coolbrith with Evercore.
Great, thanks for the questions, appreciate it. Adam, you've mentioned a couple times now the connection between ad ROAS and max. Just wondering if we could maybe put a finer point on it. If a publisher were to give another platform first look at inventory or something like that, would that significantly degrade that connectivity between ad ROAS and max from a UI perspective for that publisher? And then I have just a quick comment.
Yeah, I mean, our terms are that they can't do that, so that's not part of the equation.
Got it, perfect. And then I think there's also a notion out there that demand partners might bid differently in a different environment or something along those lines. Do you have any Any thoughts on that?
Yeah. I mean, look, Max is fully fair, transparent. We get audited by the bidding partners. It's the vast majority of the marketplace. Wouldn't it be a foolish business decision to bid differently in a very small platform versus the platform that owns most of the space? Doesn't make any sense. So if someone's going to be a competitive bidder, they're almost certainly going to want to be a competitive bidder in the marketplace leading market.
Got it. And then just one last quick follow-up on the breakage that you mentioned in terms of the qualified leads to go live or launch. Just wondering if you could talk about maybe some of the inhibiting factors today and how you'd plan on solving some of those. Thank you.
Yeah, the biggest one is that they just don't have video ads for our platform made to the type of format that we need. So those generative AI tools should be able to raise that to a much higher percentage of customers going live.
Okay, great. Thank you very much.
Yep.
Your next question will come from Jim Callahan with Piper Sandler.
Hi, everyone. Thanks for the question. Just follow up on the market growth. You've kind of talked to this double-digit framework through the back half of 25. Can we expect that through 2026? Is that like a step function change that we think can continue?
Look, Max is growing really quickly. A lot of it's driven by the strength of our platform. So when we were growing 70% plus year over year, a lot of the dollars spent on our platform are the publishers buying customers. So it fuels growth in the ecosystem. So long as we're doing a good job and the other marketing platforms in gaming are doing a good job, the Max market is likely to be growing really quickly. And this is now no longer a case where you just don't have other data points. Unity Vector is growing really quickly. That you've got a company like Moloko that's private but talking about going public that's growing quickly. Liftoff did testing the waters in a roadshow, so those numbers were out there that are growing really quickly. When you've got all these market players growing quickly, that Max market is growing in a way that people I don't think understood or would have expected, and we're not seeing any slowdowns there.
Got it. That's helpful. Thank you. And then just you've talked about this reinforcement learning framework for gaming. Now that we're, I guess, like a year and a half into e-commerce, how does e-commerce reinforcement learning kind of compare? Is it faster or slower? Does it take longer?
Yeah, I mean, what we've talked about is that the gaming model based on its own results can improve. So it creates its own memories, it gets smarter. The e-commerce model is the same thing, but I do just remind people that we're much earlier in e-commerce. We have very little data in the marketplace. So if you think about transactional volume that we have in gaming, we've got most of the market inside our system. So the model is pretty complete from a data perspective. And then also we've had now, I think it's roughly 3 years to continuously improve that model. And as you've seen, we've continuously improved it many times over the last 12 to 14 quarters. E-commerce is newer. It's starting from an earlier place. We have much less data penetration. So we can't go and track like, okay, in a stable world, how much is the model improving? Because the model is going to be improving much more so from our team improving the model with changes, and then just customers coming on. Every new customer that pixels their site passes data to us, both engagement data and transactional data. So as we get customer ramp up, our data penetration in the market is going to go from very little to much greater. And as that happens, that's going to be a big catalyst for improvement in that category.
Great. Thank you.
Yeah.
Your next question will come from Stephen Ju with UBS.
Right. Thank you. Hi, Adam. Hi, Matt. I think you've previously talked about AppLovin being demand constrained versus supply constrained. But can you help clarify, particularly, yes, there's yourself and the private company you just called out, as well as Unity, all out there getting better as well. And I think investors are so accustomed to thinking about all of this being zero sum. So, can you help us think about how much more supply there can be with perhaps new publishers and what existing publishers who already accept that can think about doing?
Yeah, I think we're a long way from needing new publishers. I mean, we've talked about one, I think at this point, people should believe it's not a zero-sum market. This isn't rideshare where one person takes a ride and another loses. So if that was the case with our growth and our market position being this dominant, there'd be no conceivable way these smaller gaming ad networks could be growing the way that they are. So if we set aside the notion of zero sum, then you have to ask, well, how many transactions can we drive to this billion plus users? 1 billion users playing mobile games, casual games every single day, shopping users, because they're adults, they skew female, are not done at this number of dollars. I mean, if you just translate to Meta's users, it's 3x more users, a little bit more time spent, but the revenue that they're driving to advertisers over what we're driving and the whole space is driving to advertisers is probably 8x. So there's a lot of room to go on monetizing this audience. We've also given you historically that our conversion rates on 1,000 impressions were about 1%. They're obviously higher now. We talked about that a year or two ago. The conversion rate is higher, but we think that could go as high as 5%. That's what we see when we're serving an ad where the model is confident that the user is going to take an action. Now, why isn't our whole business converting at 5%? Why aren't we doing $50 billion of revenue on the system? Well, we don't have enough advertisers yet to know what the user is going to be into at that moment. So if we constantly serve them gaming ads, some users are into a new game, they're converting at 5%, 50 over 1,000. Other users aren't, and the conversion rate is atrocious. It might be 2 over 1,000, and it dilutes you to 1%. E-commerce has given us a path to diversity, but we only have a few customers. Once we get deeply penetrated into the space and we've got really diverse content to show the customer, we think that conversion rate is going to keep rising, and it's going to keep rising really quickly.
Gotcha. And secondarily, I think you've articulated a desire to go after advertisers of a certain size. So, first, before targeting the advertisers with perhaps larger budgets, but maybe more upper funnel. So, is that part of the market inaddressable right now, or is that something that might be in the roadmap in the future?
I think we're going to be going after anything that's not brand dollars. So by brand, I mean companies that aren't optimizing to point of transaction. Whether they optimize to point of transaction or something performance-based like a lead, we're going to go after them. Now, we're not going to build out the sales force to go after even in the performance space, advertisers that then need you to go to their agency, that need you to take a lot of time to go get a lead, to go get an advertiser live. When I talk about this Israeli cookware company, it was a business that was probably spending a couple $1,000s a day, ramped up to many tens of thousands, possibly hundreds of thousands of dollars a day on our platform. They ramped up really quickly. They scaled their business from near 0 to 16 million to now hoping for 80 million this year. That's an example of taking a customer that didn't have much of a business, plugging them into our tool set, letting our technology do the job, and creating a huge business for them and a great relationship for us. That's the type of stuff that really cascades into much more value creation over time, because it happens quickly. They become dependent on our platform. We love those stories because we're helping them build a business. If we help Coca-Cola place more dollars in advertising, we're not moving the needle of anything in the economy. Coca-Cola is sort of blindly putting dollars out there. But if we can help customers spend the dollars, see the direct correlation to their revenue, hire people, grow their business, it's a fantastic story for us because it shows that we're growing the world's economy, we're creating jobs, and we're really creating this dependency on our platform. So really, that's what we're focused on. And in games, that was indie game developers, and brands, that's going to be these performance D2C companies, much more of the Shopify merchants, much less of those big brands that people talk about that buy through Madison Avenue agencies.
Thank you.
Your next question will come from Corey Carpenter with JP Morgan.
Hey, Matt and Adam, good to see you guys again. Matt, I got to give you a question before the call ends. So I'll ask about the 1Q guide, the 5 to 7% sequential growth. It's above what you typically guide to in 1Q. Of course, this year you have the added headwind, if you will, from the e-commerce business seasonality. Could you just talk about some of the assumptions you're making in that outlook and the trends you're seeing so far in the year in e-commerce and gaming?
Yeah, so consistent with kind of our normal practice, Corey, we're guiding to the level where we have a very high level of confidence. For Q1, obviously coming from Q4, we had a very strong exit rate. So given the factors that Adam was talking about before, the performance of the mobile gaming business, the e-commerce launch, as well as the prospecting model, we had a lot of growth in Q4. So the exit rate was quite good. And then that's partially offset by just seasonality going from Q4 into Q1, normally being a weaker seasonal period. And then we also had a couple days less in Q1 versus Q4. So it's partially offset against that. So that's how we kind of landed at that 5 to 7% sequential.
And then Adam, you alluded to, I think, an unlock that you saw a couple of weeks ago in the e-commerce business. Anything you can elaborate on what that was would be helpful. Thank you.
Yeah, look, the team is constantly improving the model. We do a lot of testing. We saw a material lift in the model. We rolled it out. Advertisers saw a huge improvement in return on ad spend. They started putting more budget into our system quickly. So those are the types of things that really catalyze growth for us. When we talk to advertisers and say, test a product in our system, it's test now, but be patient, because understand performance today is not going to be indicative of performance in 6 months. Our system is constantly improving because our team is improving these models. They do internal research. They use external research published in the AI field. these techniques can apply to what we do. And when they apply well, these advertisers see gains. In gaming, they've seen gains very consistently since we launched Axon 2. In e-commerce, again, we're starting from a lower point because you need to get more data and you need to get more time to make the models more complex to use that data and create a better value for the customer. We're now doing our job. We're improving the model. They're seeing the result. They put more money into our platform.
Great. Thank you, guys.
Your next question will come from Ralph Schackart with William Blair.
Hey, Adam. Hey, Matt. Adam, maybe just staying on that, the model unlock for a second, maybe kind of frame it. Was it sort of like consistent with other unlocks that you've seen before? Was it different, maybe an order of magnitude? And then I'm not sure if it's for you or Matt, but can you give us a sense, once self-serve rolls out to GA, how meaningful of an impact can this have on the business? Will this be a slow build? Could this be something, that could potentially be additive to second half growth? Just any way you can kind of frame that for me, that'd be great. Thanks.
Yeah, I mean, on the second one, look, our growth rates are really fast right now, and our business is really big. So taking a self-service platform and opening it up, I wouldn't imagine day one or month two is really going to move the needle on the overall numbers. It's going to build over time. Now, certainly, if you're bringing in dollars that you just didn't have before, it's going to add something. So I guess it depends on what our overall growth rates are, but the scale of the business at the growth rate that we have is getting to very, very large numbers quickly. So I would expect that to build over time. I wouldn't expect it to be immediately impactful as a major growth catalyst. It'll be noticeable in our numbers. When it comes to improving the models, we don't call it out anymore. We're constantly improving the gaming models. It happens every single quarter that we find something. And then the e-commerce side is starting from a worse place. It's just earlier stage, less data like we've talked about. So the model uplifts from the team improving the model can be much more substantial. However, the e-commerce business, as you know, even if you took disclosure from last Q1, it was roughly 10% of our business. So if you improve 10% of your business for 40%, you're still only getting a 4% uplift on the whole, right? So it's a much smaller potential today. Now, what we know about scaling a business is that we've got to compound these gains so that our performance is unquestionably the best in the market to these customers. If they see that, they're going to invest more and more into us. Most of these customers have scaled businesses. Most of these customers already buy on social and search. We're a new entrant. Most new entrants in the field over the last few years have done a bad job of proving performance. So we know that our performance has to be top notch. We're working towards that, and these types of lifts can compound to get us to that answer.
Great. Thank you.
Yep. So.
Next, we'll go to Martin Yang with OpCo.
Hi, thanks for taking my question. In the past, you referenced expanding supply sources. Where do you rank among the growth drivers? Where do you rank that among the growth drivers for your overall performance now?
I mean, look, our supply is growing very quickly because Max is growing very quickly, right? So I do fixate people on the marketplace that we have. It's a really large marketplace. If we go get a big publisher tomorrow, it's not going to move the needle in the business because the percentage growth from that publisher to the whole of our market isn't all that much. I mean, you're talking about a marketplace. If you know the scale of our business and the ad dollars that we gave you, and then we're not the whole market, the Max marketplace is well over $10 billion a year. There's not a lot of publishers that could put a dent in those overall numbers. We will eventually go out to new publishers. We get calls all the time. Every publisher wants a monetization platform like ours to help them monetize their business, unless they're Facebook, Google, or Amazon. And so there's a lot of opportunity out there for us to expand supply. But right now we're focused on the demand side because that conversion rate can go up so much more than where it is today. We've got a lot of growth in front of us just by doing the demand generation well and improving our core models.
Gotcha. A follow-up on the creative side. Do you view Axon for e-commerce, the creative format and the overall flow with the end cards and internet elements as an area of differentiation?
Yeah, I mean, look, our ads force attention. So it's a lot different than ads that people are used to. You'd say the closest to our ads is television because you got a 30-second clip. But as we know, most people are ADD and don't really watch the ad on TV these days. Our ads are over 30 seconds of engagement. The user can't do anything else. They're already on their phone. It's a full screen lockup, and it gives the advertiser somewhere between 30 to 60 seconds plus to engage the consumer with their content. They can't get an experience like that anywhere else. So I'd call like the starting point in our business in terms of ad quality the best that an advertiser can access anywhere in the world.
Thank you.
We'll take our next question from Vasily Karasyov with Cannonball.
Thank you for taking my question. Just to follow up on what you said earlier, Adam, about e-commerce model being at a stage where it can't learn as fast now. And I think in the blog post you made recently, you mentioned that the e-commerce targeting is different because there are many more parameters and they're different, right? There is a different LTV calculation. There is no advertising component. So I guess it's unfair to ask you to compare where the e-commerce model is at this point in its existence compared to where Axon 2 was, right? Because there isn't just enough data. But what gives you confidence that once you get enough data, it will work as well or compare?
I mean, look, if you talk to the customer base, a lot of the customers are seeing equal performance on us to any other top of funnel discovery channel, including the largest social platforms today. So it's not like we're starting behind trying to catch up. We're starting in a competitive place trying to become the best in the world. Now, we're starting with very little data penetration. This is an important point. If you think about the gaming model, I made this point earlier, all the transactions in the space, say all the IEP in the space, all the ad impressions in the space, our model sees the vast majority of everything in the world of mobile gaming today. That allows our engineers to take that data and translate it into exceptional predictions on the other side. In e-commerce, we're starting with, I mean, the reports show thousands of sites, right? So we're starting with thousands of sites in a world where we can pixel 10 million plus. We have a long ways to go to get to the same data place in e-commerce as we are in gaming. Now, the good news is these models are exceptionally smart and our team that's putting them together are exceptionally smart. So we don't need to have 100% market penetration or anything close to gaming to really make an impact. We're already proving it works with very little market data penetration. Once that number starts growing quickly, you're going to start seeing this model just improving itself because it gets more data. And off of that incremental data, the same model is going to make better predictions, both for gaming and non. And that's really going to help catalyze growth in our business as we bring on advertisers. We think about every new advertiser as dollars, but just as importantly, data into the model.
So I guess it's more fair to say that what you have now in terms of the e-commerce model is already competitive. It's not like you're behind and need more.
For sure, yeah. I mean, like we're not an e-commerce brand, but if you talk to them, if you talk to 10, at least 5 are going to tell you performance on our platform is really good.
All right, thank you. That's helpful.
Yeah.
We'll take our last question from Tim Nollen with SSR.
Thanks. Hi, guys. Tail end of the discussion. So just a few tidying up questions, actually. For Adam, first off, we're talking about e-commerce, all this conversation, but there are other sectors beyond e-commerce that you're servicing. Can you just clarify, I guess e-commerce is by far the largest non-gaming sector, but what other sectors are you servicing and how meaningful are they?
Yeah, look, the other sectors are still early. We started calling it e-commerce. I call it web advertising now. Anyone with a website with a transactional business model should be able to work on our platform. However, we're much earlier in the model evolution for other businesses outside of e-com.
Yep. And then a couple bits for Matt, actually. You've done a great job bringing costs down quite a lot. A lot of that is SBC, I think. You had a slight step up, I guess, sequentially in your R&D number in the cost lines in Q4. I guess the question is, with such a high adjusted EBITDA margin, you seem very confident in maintaining that. What do we need to know in terms of other cost items that could rise? How much could they rise in the coming, several periods, not just Q1? And then last question is regarding cash. You've got now $2.8 billion of cash with $3.5 billion of debt on your balance sheet. Just wondering what your capital structure thoughts and your use of cash priorities would be from here.
Yeah, in terms of the margin, I mean, we feel very confident in the margin level that we're at today. The kind of X factors that could potentially change that in the near term or in the short term would be potentially performance marketing that we were talking about before. So it's the extent that we see really great performance, with some of the campaigns that we're running, and we scale those up pretty significantly, we could see kind of a shorter term impact in margin. Obviously, we're going to be doing that in the way that we spend, generally speaking, which is very disciplined, and then obviously looking at the returns. So we'll run return-based campaigns. So we'll get the spend back in a relatively short period of time. Matt, I mentioned 30-day return from those. So, overall, that's why we can, feel so confident in the overall margin level that, it shouldn't change materially from here. And then in terms of use of cash, obviously, our first priority is spending on the organic growth initiative. So that's ensuring that we're continuing to retain our talent, compensating people very well, hiring, to continue to support our growth initiatives like e-commerce and our engineering team, et cetera. But that really hasn't moved the needle, obviously, in terms of the cash and the cash balance growing. So then it's really, what do we do with the cash after that? And we've been very active, with our repurchase program, and we continue to plan to be.
Okay, thanks. I'm gonna write it 60 minutes exactly. So good timing. Thanks.
Perfect. Thank you.
And that concludes the question and answer session for this quarter. We thank you all for joining us today. Have a good afternoon.
Thanks, everyone.